I want to break down how I made $100,000 on the first real estate deal I did in my 401k. Now, this is a boring property. This was a 3-bedroom, 2-bath rental in Indianapolis. You see it here. It's so beautiful, right? Now, this is a great property though. Boring properties can make great investments. Now, how do you make money? It all comes down to the numbers. So I want to break down how I bought it, the cash flow I made, and then how I sold it. I sold it just about a year and a half ago. All right, so let's flash back to 2017 when I bought this property. And you know what? Let's just look it up on Zillow. You can see the Zillow listing here. This is this adorable property I bought in 2017 right here for $85,000. It initially rented for $1,000 a month. You can see here my rents went up over time. You can see these are all the listings for rent. By the time I'd sold it, it was at $1,300 a month. Actually, I had increased the rent on the last tenant. And so this was a great little property. $85K initially rented for $1,000 a month. All right, so I got an $85,000 purchase price. That's what I had to pay to get the property in 2017. Now, when I went to go buy this, I put $40,000 down. That's right, I put $40,000 down because I did it with my 401k. I'll come back and explain that here in a second. But you could have just put 20% down, doesn't matter. I decided to put $40K down, and I got a loan for the balance of $45K. Now, this property rented for $1,000 a month at first. The nice thing about rental properties is over time, the rents go up. And you can see from this one, the example I showed there on Zillow, the rents did go up over time. But this initially rented for $1,000 a month. And when you're looking at a rental property, this is one of the key takeaways. I'm going to give you 3. The first one is you got to make sure that you buy it right. You make money in real estate by buying right. You realize that wealth and that gain when you sell it. But you make when you buy, so you've got to buy right. And how do you know if you're buying right? Well, the numbers got to make sense. Can the rent I'm going to get on this rental property cover my expenses so that at least I have a little bit of cash flow going into my pocket? There's lots of ways you make money on rental real estate, but the primary way you build wealth in a rental property is the appreciation. Now, as you'll later see in this property here, I made over $100,000 of appreciation on this property in 5 years, but I also cash flowed the property during the time. And the tenant's rent was putting money in my pocket, paying down the mortgage balance, and I got the benefit of the appreciation on the property. All right, now let's talk about the expenses on this so you can see how this cash flowed. My mortgage expense was $405 a month. This included my insurance and property taxes. Now remember, this was a little dinky rental in Indianapolis. Now I also had a property manager. I live in Arizona. I was going to manage this property. Even for my properties here, I don't manage them. And that property manager cost me 10% of the rent, which was $100 a month. Now you factor in a little bit of vacancy rate. I was cash flowing this property a little over $500 a month. Now this was money going into my pocket every month. But what else was happening here? Well, I did have a mortgage, and every month I was paying that mortgage, this $405 monthly mortgage payment. There's a portion of that going to pay down the principal of the mortgage balance. And who got a benefit from that? You're looking at them. I got the benefit right of the mortgage pay down. Another great reason to be a landlord. Okay, so I made sure I could cash flow the property. I wasn't trying to make money from the cash flow. I just wanted to make sure I could make money from the cash flow. I knew in the long haul how I'd make money on this property, and how I think about real estate investing in general is I'm going to make money on the growth over time. Now, typically I like to buy properties for a 10-year window. This one happened to do well in a 5-year window, so I sold it. Now, at the time I sold it, and we can go back to Zillow here and you can just look at it, the rent was actually $1,200 a month rent. And as you can see, I sold it for $183,000. So this $85,000 property in 5 years sold for $183K. Now at closing, the way it worked, the mortgage had been paid down to about a $30K balance. I was actually paying the mortgage down ahead of the amortization schedule just because I wanted to get ahead of it, and I had the cash flow to do it. But at the time of sale, the mortgage balance was around $30K. Now I had some commissions and expenses that cost me around $10K. And so on the settlement statement, when I sold for $183, I didn't get $183. $30K went back to the mortgage company to pay off the loan, $10K went to realtor and other expenses, and I netted from the sale about $140K. Now this was on top of the money that was sitting in my bank account from the cash flow, and I'd made some other investments with it, but I still had some money sitting in cash flow in the bank account. Now I had some bumps along the way. I had a tenant trash the property and 2 months where it was not rented, but I had cash flow that was saved up that covered that, and then I fixed the property and got a new tenant back in it. Now if you just look at my return on investment on this property loan, I had a 350% return on investment just from the appreciation. If you take that on an annual ROI, that is over a 70% return on investment. Now, should I have sold that property? Maybe I was a fool. I think I just made a great investment, but sitting here shooting this video, looking at Zillow right now, I can see the Zillow's estimate of the property, if you believe those, is $206,000. maybe I should have just held that property until now, and I could have sold it now for $206,000. Now, I've actually been lending that money out at 12% interest and 2 points. I'm probably ahead of that $206,000, but who knows? The tricky part of investing is really knowing when to sell. It's easier to determine when to buy because you can run the numbers, make sure the cash flow analysis works. If it does and you believe in the market, that it's an area that can grow, you get the benefit of the appreciation over time. You will always make money investing in real estate if you're in it for the long haul and investing in good markets. But the trickier part is knowing when to sell. And that's where my more sophisticated and wealthy clients, they just don't sell. They continue to accumulate assets, accumulate properties. Why would they sell? Now they've just got a problem. They've got to buy more assets. So if you have an income producing property or asset that also is going up in value, just keep riding that investment. Now, you heard me say earlier, I did this in my 401k, and you're like, wait, was that a typo, Matt? No, your IRA or 401k can own rental properties. My 401k literally bought that property. I made 3 years of contributions, got $40,000 into my 401k, and I went out and bought a rental property with it. Every day here at our company at Directed IRA, frankly, every 30 minutes, someone's buying a piece of real estate in their IRA account. We have $1.8 billion in assets here, and the number one investment, the most popular thing people buy with their IRA here, is real estate. Now, to do that, it takes a self-directed IRA or 401k. You can't just do that with your TD Ameritrade IRA or your Fidelity IRA. The problem is those are broker-dealers. They sell financial products. So when you have an IRA there, you can invest in broker-dealer product. You need what's called a self-directed IRA. So you need to move your account from the broker-dealer IRA over to a self-directed IRA provider. There's about 20 companies that do this. We happen to be the best, but you don't have to use this. You just need a self-directed IRA provider that will let your IRA invest in real estate, private companies, small business, startups, crypto. These are all assets your IRA can own. My retirement account happened to own this rental property. All the cash flow was building up in my retirement account. The gain when I sold it went back into my retirement account, no tax, and I reinvested it into other assets. Now, that's the important point I want to leave you with today. When you're making money in real estate, you want to reinvest and continue to grow your assets. Whether you're doing it outside of your retirement account with a 1031 exchange or other strategy where you pay no tax on the gain, or you're using your self-directed IRA or 401k where there's no tax when you sell an asset, building up assets is how you get wealthy. If you get the gain and go spend it and buy a cool car or upgrade your lifestyle, that is not wealth, that is consumption. You didn't make $100,000, you spent $100,000. There's a difference. So if you're serious about building wealth, make sure you're redeploying that capital to go buy more assets that create more income and appreciate more over time. Now, I want to hit a couple points because I know there's somebody going to ask in the comments, well, Matt, you got a sweetheart deal. No, I didn't. This property was not a sweetheart deal. It was listed for sale on the MLS. There was no creative structuring. This was not somebody in foreclosure. In fact, do you want to know who sold it to me? Another real estate investor that bought the property at auction, rehabbed it, and sold it to me for a profit. Someone else already made money on this property before they sold it to me. And you can look right here on Zillow where it says in 2017 in January, someone bought it for 44 grand. It happened to be rehab before I bought it. I bought it for 85K. Now, I don't know what the person who bought it before me put into the rehab, but presumably they made money when they sold it to me for 85K. So don't get caught up in, Matt, you're some special person, you got some sweetheart deal. No, I didn't. This is a boring deal. It was on the MLS. Anyone could have bought it and made an offer on it. Second thing I want to dispel. I know the comments coming. Well, Matt, it's different in today's market. You know what? I just talked to a real estate investor today buying rental properties in Memphis, Tennessee that cash flow nicely over the mortgage rate, plenty of cash flow left for 140K. So the opportunity is out there. And I know a lot of you are thinking about the interest rate in your head and the mortgage is going to be expensive. Can I really cash flow it? And yes, that's a valid concern. But remember this sage advice, take the risk or lose the opportunity. Opportunity does not await. You've got to go and seize it. Investing in real estate is one of the accelerators of the ways that you can build wealth. I hope you've enjoyed today's video. Please subscribe. We'll see you next time.